While everyone's been staring at XRP's price chart, Ripple has been quietly building something in the background that could change everything about how this company operates, and almost nobody outside of crypto Twitter is talking about it. Ripple is becoming an actual bank, not a crypto company that partners with banks, not a payment processor that works alongside banks, an actual federally regulated bank, sitting inside the same system as JP Morgan, Wells Fargo, and Bank of America. Let me walk you through exactly what's happened, because the timeline here matters enormously. Back in December of last year, the Office of the Comptroller of the Currency, the federal regulator that oversees national banks in the United States, gave Ripple conditional approval to charter something called Ripple National Trust Bank. This wasn't just Ripple getting approved. 4 other major crypto companies got the same nod at the same time, including BitGo, Fidelity Digital Assets, and Paxos. That alone tells you something big is shifting in how Washington views crypto firms. Now here's where it gets interesting. A trust bank isn't like a normal commercial bank. It doesn't take deposits from regular customers, and it doesn't hand out loans the way your local bank does. Instead, a national trust bank exists primarily to custody assets, manage settlements, and handle fiduciary responsibilities. For Ripple, this is specifically designed to support their stablecoin, RLUSD, giving it both federal oversight from the OCC and state-level supervision from the New York Department of Financial Services at the same time. CEO Brad Garlinghouse didn't hold back when this approval came through. He directly called out traditional banking lobbyists, saying their complaints about crypto companies not playing by the same rules were transparent, and that Ripple was now operating directly under OCC supervision and standards. That's a pretty aggressive statement from a company that spent years fighting the SEC in court. It tells you Ripple sees this banking charter as vindication, and honestly, a weapon against the very institutions that spent years trying to keep companies like Ripple out of the traditional financial system entirely. But conditional approval back in December was really just step 1. The much bigger development came 4 months later, in April of this year, when the OCC's final rule on national trust bank activities officially went live. Before this rule, trust banks were limited to a fairly narrow set of fiduciary activities. After the rule took effect, trust banks like Ripple's can now engage in expanded non-fiduciary activities, including full digital asset custody, stablecoin reserve management, and various payment-related services. This is the rule that actually makes Ripple's December approval operationally meaningful. Without it, Ripple's bank would have been custody only, with almost no ability to support the broader business Ripple actually runs. Now let's talk about what this actually means for XRP the token, because this is where a lot of coverage gets it wrong. I want to be straight with you here. The bank charter itself does not directly change XRP's regulatory status, and it doesn't create some instant wave of buying pressure on its own. XRP's legal status as a digital commodity already came from a separate joint classification by the SEC and CFTC back in March. What the bank charter actually does is remove friction. Before Ripple had this federal oversight, any bank considering plugging into RippleNet had to weigh serious reputational and compliance risk working with a company that had zero federal banking supervision. Now that risk calculation has fundamentally changed for compliance teams at exactly the institutions Ripple needs to bring on board. Here's the part that should really get your attention if you're holding XRP for the long term. Ripple has also applied for something called a Federal Reserve Master Account. If approved, this would give Ripple direct access to Fedwire and the Federal Reserve's actual payment systems, the same rails used by the biggest banks in America. Think about how significant that is for a second. This would make Ripple potentially the first crypto-native company in history with genuine full banking integration in the United States. Direct Fed Reserve custody would give RLUSD a level of safety and transparency that literally no other stablecoin issuer currently has, since every other major dollar stablecoin today holds its reserves at commercial banks instead. Circle, the company behind USDC, is chasing this exact same Fed Master Account goal right now. As of the most recent reporting, neither company has actually received approval yet. The Fed has historically been extremely cautious here. Custodia Bank, a Wyoming chartered institution, spent years trying to get a master account and was ultimately denied back in 2023 over concerns about systemic risk and the precedent of letting crypto firms into the central bank's core payment infrastructure. So Ripple isn't guaranteed to get this either. But the political and regulatory environment has clearly shifted since then, and there's currently a decade-long regulatory review process underway called the EGRPRA review, running through July of this year, which gives top regulators like the OCC, the Federal Reserve, and the FDIC the power to update banking laws without needing Congress to act at all. Some analysts believe this rare review window could actually give Ripple's application an unexpected fast track. So why should any of this matter to you if you're just holding XRP and watching the price bounce around? Here's the connection. If Ripple's banking infrastructure keeps expanding and more institutions plug into RippleNet because the compliance risk keeps dropping, more real payment volume starts flowing through Ripple's rails. And every single on-demand liquidity transaction that Ripple processes uses XRP as the bridge asset to move value between currencies in real time. More institutional volume flowing through those corridors means more organic demand for XRP itself, not because of hype or speculation, but because actual payment infrastructure needs it to function. The honest caveat here, and I think you deserve to hear this clearly, is that this benefit for XRP holders is indirect, and it's going to play out gradually over quarters, not overnight. The bank charter primarily benefits RLUSD and Ripple's core business first. XRP benefits secondarily, as a supporting piece of that larger infrastructure. Whether XRP genuinely captures meaningful value from all of this, or whether Ripple's own stablecoin ends up carrying most of the institutional settlement volume while XRP just rides along, is still an open question that nobody can answer with total certainty right now. What we do know for sure is this: Ripple is no longer just a crypto payments company hoping regulators eventually come around. They are actively building themselves into a genuine piece of the American banking system, with federal oversight, a pending Fed master account application, and infrastructure specifically designed to make institutions comfortable working with them at scale. Whether that translates into a stronger XRP price sooner rather than later depends entirely on how fast that Fed decision comes, and how much real payment volume actually starts flowing through Ripple's rails once the dust settles.